It's all kind of buzz out there about a big national builder who is getting sued over payment increases and the consumer not understanding the why behind it. It's actually simpler than it sounds. I think there's like so much complexity out there. But when you buy a newly built home, the property taxes have not been assessed yet with the dwelling on it. It's only assessed with land only. And it can take, depending on the municipality across the country, it could take months, it could take even years for that dwelling to be assessed. So it's not so much about the payment increase, because a lender can tell you what they're expecting your payment to be increased to, just based on average comparables for that area, for that price point. It's not really about this. And I would also contend it's not even about the increase that's going to happen to your payment at some point in time. The real rub is when it comes to your escrow account. And remember, your escrow account is the account that your lender holds. Your money that you pay every month as part of your PITI payment, principal and interest, taxes and insurance. It holds the portion of your taxes and insurance. It goes into the escrow account. So the lender has enough money to disperse on your behalf when those items come due. So today I'm going to break down how it all works. When you close on a new build, it's not like the county assessor runs out and immediately assesses the house. That may not take place for 6 months, a year, could be up to 2 years. So there's always this discrepancy in payment today versus payment once the house has been assessed with a dwelling. Let's say you're purchasing that $550,000 house, and based on land only, that property tax portion of your payment is roughly $35 a month. Okay, that's just land only, because again, the house hasn't been assessed yet on the closing day and may not be for some time of land with a dwelling. So when we move forward and once the house has been assessed, then let's say that that tax actually is assessed at $285 per month. So that's a $250 increase per month that brings you to a total estimate of, in this case, $285. So that's changing your payment dramatically. It's changing your payment by $250 a month. Well, here's the catch. That's just one piece of it. So if you're not expecting and you're not budgeting for this, that's how you're going to get off track. Now, when this comes, it's going to vary depending on the city, the county, property tax assessment that happens in that particular area. And it can vary across the country. But for this example, it's not just this. It's not just the increase of $250. It's when it happens and what's happening with your escrow account. And here's the key component. And this is why people really get themselves into trouble. So let's say in this builder's case, they're not collecting the anticipated amount. But some mortgage companies do require that people pay the anticipated amount because they want them to get into the practice of paying the full expected PITI payment. In this builder's case, that's not what they were doing with their mortgage company. Okay, fine. So I told the person that reached out and asked me for clarity on this. I said, look, you need to budget and think and plan for this, no matter how long it takes for this to happen. So set aside the $250 a month and put it into a savings account. Because when the property is assessed, depending on when it's assessed, you don't want your payment to go up by only what it's going to go up to actually bring it to the actual property tax amount. That's going to happen. But what you want to avoid is having that increase in your payment plus any escrow shortage. This is where it gets painful. So if you haven't set aside money that you can stroke a check and send it to the lender when they say, hey, your property taxes have been assessed and now your escrow account is short by X dollars. So in order to get your escrow account to have enough money in it, we're going to not only increase your payment to what it should be, but now we're going to have to catch that escrow account up. So this is the pain point. It's with an escrow shortage. So let's say they come in and say, okay, your payment's going to go up by $250, but you got to pay another $150 a month to get your escrow account in a position that it has enough money to pay your property taxes when they come due. This is the pain right here because you haven't budgeted for it. So not only are you paying this, now your payment just went up $400 a month. Now that's just temporary, but that still can be painful. So I'm telling anybody out there, if you're buying a brand new home and your lender's only collecting land-only property taxes, don't get confused. That's just for a period of time. Set aside whatever amount that is you believe, and it's very easy to figure this out. Your lender should be able to tell you based on that area that you're purchasing, based on the purchase price, here's what we anticipate your property taxes to be. Realize that until they're assessed, nobody really knows the actual final number, but lenders can get very close and set that money aside every month in a little savings account. That way, when your lender does your escrow analysis after your property has been assessed with the dwelling on it, and they come back and say, hey, you're short, whatever that number is, $2,000, $1,500, $3,000. You've already set aside the money. You've already budgeted for this, and you can just write the check. So then your payment is only increasing by the projected amount that you were aware of all along. Not this amount plus whatever your escrow shortage is. This is the pain. This is where people get off track. So your lender or escrow officer may tell you that they're not going to come back to you to have to make up back taxes. And that's correct. It's not like if this is assessed in, let's call it January of 2027 for a home that you're purchasing today, it's not like the lender or anybody goes back and says, now you got to pay this amount for the previous 2 years. No, that's not what happens here. Where the discrepancy is all about your escrow account. So stick with me. All right. So now here's what happens. You're paying into an escrow account. A portion of your payment every month is set aside for property taxes and homeowners insurance. Now, depending on when your property taxes are assessed, in comparison to when your escrow account is analyzed by the lender, that's the gap. So let's say that your property taxes are assessed in January. And let's say now your property taxes should be $285 per month based on the assessment. Lenders don't immediately take the notice from the county or the city or the municipality, come back in and immediately raise your payment. This is the gap. They may not review your escrow account, which is only done generally one time per year. They may not do that for another 6 months, 10 months, or even a year later. So what if the lender is not reviewing your escrow account for a full 11 months and you continue to pay this lower amount? All the while, this is actually now the amount that's due. This is the gap. It's an escrow shortage gap. And so then the lender's going to come to you, as I mentioned, and they're going to say, hey, you owe us the money from January to December for the difference between what we collected and what the home was assessed at. So we got to make of that escrow shortage, that amount of money that's due to us. Plus, going forward, we're going to reset your payment based on the new amount. You already knew this. You already knew that that new amount was going to be whatever the estimated taxes were. But it's this escrow shortage. This is where the pain lies because it's confusing. And I get it. This actually happened to me on my first house, the same exact scenario. But because I knew how it worked, I did what I just told you to do, which is I knew what the estimated amount was going to be. I knew that they were collecting not enough. And I just set aside money every month into a little savings account. So when this happened, and it did, and the lender said, okay, Kelly, you have a choice. You can either pay us the $2,000 that you owe us, or we can increase your payment in addition to increasing it to what the property taxes are now that it's been assessed. We also have to increase it to cover for that shortage. So what do you want to do? Lenders will give you that choice. I had saved the money. I sent the check. So I only had the increase to what I was expecting anyway, which was the property tax assessment amount. So hopefully that helps to clear up this whole question about what we're reading in the media and the class action. And if you're going through the process, it can be confusing. So hopefully this video helps you really understand that your escrow account and the point in which it gets analyzed by the lender does not always coincide with when the municipality actually assesses your home with a dwelling on it. That's the rub.